Hey everyone, welcome back to Corporate Decoder, the place where we attempt to decode the mysteries of big business. And let me tell you, this latest filing from Aptera Motors is quite the puzzle. Get ready because we might just find out if their solar-powered dreams are paving the road to success or a dead end. Aptera Motors is looking to raise some serious cash through stock sales, and this document is basically their roadmap for investors. It is a lot of important information, but we're going to cut through the jargon and get to the juicy bits. Before we dive in, if you love getting these raw, unfiltered looks at corporate filings, please hit that subscribe button and the notification bell. Also, we have a fantastic community over on Discord, linked in the description below, where we break down these kinds of documents and discuss investing strategies. You should definitely join us there. So what is the big deal here? Aptera, a company aiming to revolutionize electric vehicles with solar power, is registering a massive amount of their Class B common stock for resale. This isn't them selling new stock to raise money directly, but rather letting a major investor, New Circle Principal Investments LLC, sell shares that they've acquired or will acquire. Think of it as them legitimizing a big chunk of stock that is about to hit the market. They're hoping to eventually reel in up to $75 million through selling stock to New Circle under a purchase agreement. Plus, they're issuing some shares called commitment shares to New Circle, just for agreeing to this deal. Their stock is trading on Nasdaq under the ticker SEV, and as of the 20th of October last year, it was sitting at $5.28 a share. Keep that number in mind as we look at their financials. Now, every company filing has a section on risks, and Aptera's is a doozy. They flat out admit they have a limited operating history and have not made a single profit yet. Seriously, their auditor has issued a going concern opinion, which is a polite way of saying they're not totally sure the company will be around in a year without a lot more money. They need to raise a ton of capital, and they acknowledge that future fundraising could significantly dilute existing investors, meaning your share of the company could become much smaller, possibly at a discount. They're upfront about being dependent on future financing, and the automotive industry itself is super costly to break into. And here is something that should grab your attention. They've already had production delays because they just didn't have the money, face supply chain nightmares, and hit technological roadblocks. This isn't a company smoothly sailing, it is one battling headwinds. Interestingly, Aptera is a public benefit corporation. This means their board has to balance profits with doing good for society and the environment. While that sounds nice, it also means they might make decisions that don't purely focus on making shareholders the most money. That is a crucial point for investors to consider. Let's look at the numbers for this specific offering. They're registering a whopping 6 million shares for resale. Right now, they have about 10 million shares outstanding. If they sell all these shares, that is a significant increase, potentially diluting current owners. Crucially, Aptera itself doesn't get any money from New Circle selling these shares. However, they could get up to $75 million if they sell more stock to New Circle later through their purchase agreement. They plan to use any money they get for general business stuff, but they're keeping their cards pretty close to the chest about the exact breakdown. Now, for the nitty-gritty, the financials, this section is where management tries to tell their story, and it is always a fascinating read. For the 3 months ending the 30th of June 2025, their net loss was $12.1 million. That is a big jump from the $5.6 million loss in the same period last year. And for the first half of the year, their loss ballooned to $22.9 million, up from $17.8 million in the previous year. Their selling, general, and administrative expenses jumped by 127% in the latest quarter compared to the year before, mainly due to higher stock-based compensation and legal costs. They're spending way more on legal fees because of lawsuits and regulatory stuff. And research and development expenses, they more than doubled in the latest quarter, mostly driven by stock-based compensation too. It seems like options and stock awards are a big part of their compensation structure. Looking at the full year, their net loss for 2024 was $34.9 million, which is better than the $59.3 million loss in 2023. So they are losing less money year over year, but still losing a lot. Let's talk about money they actually have. As of the 30th of June 2025, they had about $13.1 million in cash, but their monthly expenses, even to just keep the lights on and handle regulatory issues, are between $1.2 and $1.5 million. That means their cash won't last too long at that rate, especially considering all the legal and public company costs. They need about $30 million just to get to the next step of production, and then another $30 to $40 million for low volume manufacturing. That is a lot of money, folks. They do have a grant from the California Energy Commission, but it is on a reimbursement basis, meaning they have to spend the money first before they get it back. They've gotten some money, but it is not a magic bullet. Here is another big red flag. They rely on a few suppliers for critical parts, and some of those are single source. If just one of those suppliers has a problem, Aptera could be in serious trouble. halting production. They also acknowledge significant hurdles in creating their vehicle, with uncertainties about whether it will actually meet the performance they're promising. Remember, they have yet to mass produce a single car, a really important point for potential investors. Their Class B stock, the kind being registered here, has absolutely no voting rights. So, if you buy this stock, you have no say in how the company is run. The voting power is concentrated with a few early investors and executives. Looking at who owns the company, the co-CEOs Chris Anthony and Steve Fambro hold a significant chunk of Class of voting stock, and they, along with other executives and major shareholders, control a vast majority of the voting power. And then there is New Circle Principal Investments LLC, the main seller in this offering. They currently own 0 shares of Class B stock, but they could end up with a huge pile through the purchase agreement. They have 2 classes of common stock, Class A and Class B. The Class B stock, which is what you'd be buying, has no voting rights. That is a major drawback for any investor wanting a say in the company's future. There are a lot of shares that could potentially hit the market, which could drive down the stock price through dilution. Their stock is traded privately, with prices fluctuating quite a bit, from lows around $11.4 to highs of $44.4 in 2024. It's a volatile history, and the recent Nasdaq listing is a new chapter. This section basically warns foreign investors about potential US taxes on dividends and stock sales. It's a reminder that investing internationally comes with its own set of complexities. This outlines how New Circle can sell their shares. They can use various methods, and it emphasizes that they are acting as an underwriter. Aptera's bylaws protect their directors and officers from personal liability for most mistakes, which is fairly standard but still worth noting. They've sold a ton of stock in private placements and Regulation A and D offerings over the last few years. They've raised millions this way, but it also means a lot of dilution has already happened or could happen. And here is that auditor's opinion we mentioned earlier. It confirms the financial statements are presented fairly, but it prominently highlights the significant doubt about their ability to continue as a going concern. It also mentions that the 2023 financial statements had to be restated due to errors in accounting for stock-based compensation. Looking at their balance sheet as of the 30th of June 2025, they have about $34.5 million in total assets, but liabilities, which are what they owe, are around $7.7 million. The financial statements show massive losses continuing to pile up. For the first half of 2025, it's a $22.9 million loss. This shows how their equity has been all over the place, mainly due to issuing more stock and those huge losses eating away at retained earnings. Their cash flow statements are pretty stark. They are using up cash consistently in operations, and financing activities are keeping them afloat, but it's clear they burn through cash quickly. This is where they officially say they need outside funding to survive, and that their ability to continue is dependent on a lot of things working out perfectly. This section mentions they retroactively restated their numbers to reflect a 1-for-3 reverse stock split, a common move to boost a low stock price. Here is where they detail that stock-based compensation error that forced them to restate their 2023 numbers. It shows they are still firming up their internal controls. This is critical. They're facing a patent infringement lawsuit from Aptera, and they've received a subpoena from the CC as part of an ongoing investigation. These legal battles and investigations are expensive and create massive uncertainty. And here is the latest news. Shortly after their financial year end, they had a 1-for-3 reverse stock split, converted their preferred stock into common stock, and certain investors converted Class A to Class B shares. They also have an equity line of credit with New Circle for up to $75 million. Finally, they lay out all the stock they've sold over the last 3 years without registering it, which is a huge amount, showing how much they've relied on private placements and crowdfunding to stay alive. So, what is the verdict on Aptera Motors? The company has a bold vision for solar-powered electric vehicles, and they've made some progress on design and getting suppliers on board, but the financial reality is tough. They are bleeding cash dependent on constant fundraising and facing serious legal and regulatory challenges, including a patent lawsuit and an SEC investigation. This filing screams high, risk high. Reward. The stock price could skyrocket if they manage to pull off their production goals and secure funding, but the odds are stacked against them. The lack of voting rights on the Class B stock is also a major flag for investors who want control over their investments. For now, the story of Aptera Motors is one of ambition battling a harsh financial and operational reality. It is a gamble, and one that requires a very high tolerance for risk if you are considering investing. What is your take on Aptera Motors and their solar vehicle dreams? Do you think they can navigate these massive challenges? Let us know your thoughts in the comments below, and if you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate deep dives. Don't forget to check out our Discord community linked in the description for more in-depth discussions. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.